Welcome to the Visionary Connection, where we connect with you. Today, we're going to be talking about debunking the 20% down payment myth. We're going to debunk it all together. You may have heard different financial advisors or economists or people in the mortgage industry talk about, yes, when you purchase a home, you need 20% down. That's something that they promote. I'm not going to say that 20% down is bad. This is not a video about that. But what I am saying is that if you want to purchase a home, you do not need 20% down. That is a complete myth, okay? So let's look at a few reasons why it's a myth. Let's walk through it and let's get a much better and deeper understanding. So number one, you do not need 20% down to purchase a home today. Today is the optimal word. In the past, the way that mortgages were organized and structured, yes, you needed 20% down. In fact, the cost of the average home, when you're looking at from the 50s, 60s, 70s, 80s, 90s on up, from decade to decade, there's been massive percentage increases in the purchase, to purchase a home. Well, also our per capita has increased. So really those things essentially go hand in hand. That's a whole different video, a whole different discussion. But the point is this. There are a lot of different mortgage and innovative products that have come out so that you don't need to put down 20% today. In the past, yes, you may have needed to do that, okay? But within the last several years, it's not required at all. So I want you to get that out of your mind. If you are a prospective first-time home buyer, if you've heard something else somewhere else, get that out of your mind, because I can promise you it's definitely not true. So number two, as I've talked about, many amazing loan products that require much less down. We're going to be talking about that in a few minutes, okay? But there's a lot of innovation that has taken place in the mortgage industry. Now, if you've been in the mortgage industry for a while, and you're looking at from 2006 through 2009, there were some bad innovations, okay? Some really bad stuff going on. Nina loans, Ninja loans, stated income, stated asset. Yeah, that's innovation, but really not helpful innovation, as our, economy almost blew up and a lot of places got bailed out that they shouldn't have gotten, right? However, there are a lot of very positive and wonderful and connecting innovations within mortgages, which have opened the doors, truth be told, for many people to purchase a home when they may not have been able to in the past. They had no idea that they could actually achieve that milestone in their life, but actually now they can, and we will be talking about that in the next few minutes. So number three, less than 20% down with minimal or no PMI, private mortgage insurance. That really does depend upon LTV. What is LTV? Loan to value, the amount of loan the bank gives you versus the value of the home. Your FICO score, what is FICO? FICO technically stands for Fair Isaac's Company, and they work with Experian, TransUnion, and Equifax. It's your credit score, okay? Property type, single family, townhouse, condo, all of those things play into that mix, and it depends upon the lender and what their specific rules and underwriting guidelines are. But again, you can put down very little to almost nothing, okay? And either have no private mortgage insurance or have minimal private mortgage insurance per month. It is on a case-by-case basis. So you have to talk with your mortgage professional in order to find out what your situation is and what's going to be best for you. 20%, truth be told, can be discouraging. It can be discouraging, okay? Why? Number one, we need to turn that frown upside down, because we want to increase home ownership and we want to increase morale. So what do I mean by that? If you're looking to purchase a $300,000 townhouse, a $300,000 single family home, well, you need to put down 20%. That's $60,000. Okay, do you have $60,000 laying around? Maybe you do, maybe you don't. Maybe you got a inheritance from a family member. Maybe you won the lottery. Maybe you found it in a briefcase when you were walking down the street. Most people don't just have that money sitting around. You want to keep some money in your savings for a rainy day, obviously. But again, it's a pretty high amount for someone to be able to save. Again, I'm not saying that 20% down is bad, so I do not want you to misunderstand or misconstrue the message that I'm trying to share. But what I am saying is, for many people, especially first-time home buyers, especially people who want to achieve the dream of home ownership, but you have different bills and expenses, you have life that you're facing. 20% down is simply just not possible. So that's why you can do it with much less down. We want to increase home ownership in this country, especially for minorities, to close that gap, which has been so gaping over the past several decades. We want to be able to close that gap. We want to be able to increase people's morale, to help them believe that they can graduate, they can go to the next stage of their life without being discouraged, without feeling like I can't do it, without being put down. That's what visionary lending is here to do. We are here for you, to educate you, to hold your hand, and to guide you through it. We're together. Okay, we talked about it. Number two, there's lots of different programs that exist. Number one, if you are a veteran, if you're a veteran, thank you for serving our country. Numero uno, okay? 0% down, 0% down. So we have, different videos and different instructionals on VA loans, but there's no money down. Number two, with FHA loans, you could put down as little as zero through something called the Chenoa program, and there's different down payment assistance programs where you'll get a second mortgage that you either have to repay or you don't have to repay, okay? But it allows you to have a zero down payment, okay? You may want to look at the interest rates on that because it's going to depend, and it's different from doing a regular FHA loan where you need to put down 3.5%. Even 3.5%, to me personally, and even from a business perspective, it's very realistic. It's very doable, and I would highly recommend that because especially if your credit is pretty decent, you're able to put down that 3.5%, which can come from your own funds or it can come from bona fide gift funds, okay? Bona fide gift funds. 3.5% is very realistic, plus you have the benefit of having the lowest interest rates as possible, which translates to the lowest monthly payment as possible. So that's real money that you're looking at every month out of your pocket for your mortgage payment. Number three, conventional loans with Fannie Mae and Freddie Mac. They have an amazing program. So Fannie Mae has what's called the Fannie Mae, there's Home Ready, and Freddie Mac has what's called Home Possible, designed for first-time buyers where you put down 3%, okay? Depending upon your credit score, the stronger your credit score, you can either eliminate private mortgage insurance altogether or you can have it minimized. But I'm going to tell you now, it is highly dependent upon the strength of your credit score, okay? Because conventional loans, by and large, are FICO score driven because that is a measure of risk as far as they're concerned. The lower your credit score, you're a higher risk. Risk of what? Risk of default. That's a different video. Call me, we'll talk about it. The higher your credit score, that means you're a lower risk, so you get rewarded with having either no private mortgage insurance or low private mortgage insurance. USDA, the United States Department of Agriculture, offers 0% down or very, very low down payment loans for areas that are in a rural area. So if you actually go to the USDA website right now, okay, there's a lookup, there's a search tool, and it will show you the different zip codes that they will cover for specific types of loans. Are they going to be right in the city? No. Are they going to be right in the populated county? No. They are really pushing rural areas to increase building and to increase home ownership. Finally, there are various state and county-specific down payment assistance programs that you can take advantage of depending upon where you live. In Virginia, there are programs. In Prince William County, where we are right here, there are programs. The state of Maryland has various programs. DC has programs. There's a lot that is available for you as the prospective home buyer so that you can take advantage of it. My personal opinion is this: if you do have some money to put down, you should put it down. If it's as low as 3% or 3.5%. Well, why are you saying that, Brandon? I'm saying that because number one, you have equity, instant equity. You have skin in the game, okay? And it helps you to really value that home much more when you're putting it down because you've worked for that. Number two, you're going to get a lower interest rate, okay? Pretty much across the board, when you have a down payment, you'll have a lower interest rate, again, as I mentioned before, which will help you every single month in terms of your monthly payment. Plus, you're paying less interest on your loan. So you don't want to pay all this interest and not pay as much principal. You want to pay down your loan as quickly as possible. So let's review in summary. So number one, you don't need 20% to put down. Not today. You do not need it, okay? Number two, there's lots of amazing loan products right over there that we've talked about before. Number three, less than 20% down, you can have minimal or no PMI. That's very important because a lot of people think that PMI is evil, okay? And it's not evil. In fact, I'm about to do a video on that, so I want you to check out that video. PMI is not evil, okay? It's not a ghost with a sheet over its head. All right, there's actually ways to have private mortgage insurance and it would be very beneficial to you. You just need to be educated. Number four, look, PMI could be discouraging. 20% down could be discouraging. All right, what do I mean by that? Okay, you have to put down all this money if you want to buy a $400,000 house. Do you have 80 grand just to come out of pocket? Again, maybe you do, maybe you don't. I'm not here to judge you, but what I am just here to say is that 20% down is a myth. Okay, so hopefully, you've enjoyed this video. Please give us a thumbs up. Please give us some comments, anything additional. If you disagree with what I have to say, please put it in the comments. I would love to have some great interaction. Thank you so much for your time. Hopefully this is helpful to all of you, and we look forward to seeing you again very soon.